Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, January 10th, 2022. It is 10:18 Eastern Time as I'm starting the video. Wanted to highlight a couple levels to watch, just really get a quick update out to you guys. So here we're at QQQ. We're starting out on a daily chart. You have that previous reaction high back here. You had a couple of tests of it right there, and so I give you that yellow line at 377.64, and that's clearly been taken out. So as well as the trend line, the uptrend line off the lows. Again, that trend line comes all the way back here from the September lows. Lots of reactions. So that's a sell signal about as good as it gets right there. So there it is, another check mark. Congrats to those of you that have, taken the recent sell signals, held on to your shorts. I think there's more downside to come, and still maintain my longer term swing targets as of now. Very near term, let me show you some levels to watch. Well, while I'm on the Qs, let me just go through the FAAMGs. We have three of the top components of the FAAMGs coming up on key support. So remember, QQQ, while it has now failed, that clearly failed that back test, or I'm sorry, the breakout, again, that breakout of the highs back in August. We have a couple that are back testing right now. Some levels are coming up on support, and that's Apple right here. It's not major support, but there is a reaction low right there and a couple candles right there. But remember, Apple, I give you a sell signal and a check mark for the short case last week on the breakdown of this bearish rising wedge here on the daily chart. Big divergences that have been building for a while. And for the most part, other than Friday's, almost flat doji candlestick, we've had nothing but red sticks and selling. But we are coming up on minor support with bigger support down here at 157.31. We're heading into earnings season. I think the big FAANGs are going to report later this month, so we've got a couple weeks there. But we've got some banks coming out this week, and that should probably set the tone for earnings season. But with that being said, again, Apple at support. So here's a takeaway, guys, real quick as I go through these charts. I still think we head lower, as I just said earlier. I still think we'll hit my, longer-term swing targets. But near term, we could bounce right here. Apple at support, Microsoft at an even better support. I'll give you quite a few levels on Microsoft recently, but one of those that I'm going to point out back here in August and then again in September. Missed the circle there. We had a perfect test of that level right here, 305.90. And then we had a breakout right here. We back tested on top of it for a few days and rallied. And so for the first time, really, since this breakout, we're back testing there. So there's component number two. You have Apple the largest, Microsoft second largest in both the Nasdaq 100 and S&P 500. So there's one. And so the takeaway here is very active traders could probably game a bounce off this level, at least a tradable bounce. Get in, get out, reverse your NQ, QQQ short positions if you want. Whereas typical swing traders, I think probably best to ride out any counter trend bounces. Where to? Well, just look at the resistance levels overhead. For example, if Microsoft bounces, you have 317 and change, and then the trend line is resistance. So that could give us a bounce of let me measure it out for you. Roughly could be 4% or less, 3.85. Or again, the takeaway of this, I'm showing you key levels. If we just slice right through there, like it's not even there, or we have a little consolidation then a break, you're going to see even additional check marks for the bearish case. And I think ultimately we'll get those. It's a matter of, do we bounce first? I'm leaning that way. I think we'll step in here, get a little bit tradable bounce if you're an active trader, but you could trail it up, use shorter term charts. Can't get too granular in this video for day trades and short term trades, but just kind of pointing out levels to watch. And again, less active swing traders, you're probably best not trying to game the counter trend bounces because you're going to get shaken out. And then if you're holding out for a move down to these 200 days or the deeper targets, then you may not get back in if we just drop down from here. So again, watch that level. That's the takeaway. Apple, Microsoft, number two at support. Number three is Alphabet, also pretty big support here. Why is that? Well, we had an all-time high there. It was broken, taken out right here. The level is, I'm going to color it up for you real quick. This is the A shares on Alphabet, GOGL. About 2674, right? We had again a breakout, and we back tested it for a few weeks, right? Rallied up, back tested it again successfully on 1, 2, 3, 4 consecutive candles, and moved up, and now we're testing it again. So it is a breakout that I think will ultimately fail, but this is the initial tag, or at least the first tag since back in late September. And so now I just showed you the top 3 components of the Nasdaq 100 at support. Go down to number 4, Amazon, a hair below. I have a lot of lines on Amazon, but what you can look at here are some of the recent reaction lows right here, here. We're a hair below it, but remember this is a daily candlestick, so we could certainly jump back up. Now there's a gap to be backfilled if we do rally. So there was, you can align. These are the levels I'll be looking at for. I reversed right before the video to a quick, from short to long on NQs, my active trading account, swing trading account. So I'm just letting my shorts ride for now. And so, what would that be if we bounce back and Amazon wants to backfill that gap? That's about a 3.6% bounce. So it's kind of in line with what I talked about a minute ago on the Qs. All right, so I'm going to move on from here. I'm not going to go over each and every one. That was not the intention of this video. I'll show you the NQ charts and another reason. Reversing here real quick, and I'll get right back into these shorts if need be, if the charts tell me to. I added a few levels. This is my 2-hour chart. So every candlestick's 2 hours. I gave you the hourly chart, I believe, this morning, 60-minute chart. So this one's a little longer term, and so I have a support zone here, and it runs from right about where we are. I have it at what is that? 15,169.61. We'll call that 15,170 right there. I see some reactions there. I see some others right here. And then down to, it's even better support at the bottom of the channel. But again, I just showed you some of the things that support 15,133. So we're close enough. If I'm looking, I'm not going to try to squeeze out every last penny. I'd rather reverse it here with a stop somewhat below. And again, I'll be watching the Qs and everything. There's a lot that goes into active trading. Still have potential divergence all the way out here. Again, only potential, unconfirmed. I can't state that enough. In my book, it's confirmed when we get the bullish crossover and a reversal here. We haven't done that yet. So this is still my if things get ugly target. And I think we'll get down there. That's 14,424 from where we're at now. That's still another 5% downside, but I'm leaning towards the bounce first. And where to? Well, I'll tell you what, this would be a great reload op. If we can bounce here, trail up a reversal on a long for an active trader, and then I wouldn't wait for the last penny to squeeze out of there. I'd reverse a little bit shy of that level, that 15,534 or whatever that is. 15,543, and that would be a nice bounce trade to get that. Let's see what that would be. Let me try to move this line here. That would be from where we just hit a support, where was a second ago, about a 2, right about a 2% bounce. I think it's a pretty aggressive bounce, but I think we could get. I'm going to put a line down here, because there's some reaction lows that was a line I had there for a long time, but we've had a couple reaction lows a little bit below it. So about 15,494. That would be a max bounce target right now, I think. Now, keep in mind, if that happens, we're going to confirm that divergence. We could confirm the divergence here. Don't know what just happened there. Let's go to 3-month hourly chart. Here it is. There's the potential divergence, still potential, because these are momentum indicators, and these momentum indicators are headed straight down. And we can keep going down, 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 and then we no longer have potential or positive divergence, right? But if we can bounce up here, we're going to confirm that divergence. And look, let me just always, talk about all potential possibilities. You know me, I love these divergent lows on the 60-minute time frame. They're usually the catalyst for a rally to, at least in the past, they've been to new highs. We missed that new high there, so we had those short signals. We've been short since back here and here, and that one was a heck of a counter trend bounce to ride out, but it still never took out that previous high. And now we've made a lower low. So if you look at it this way, here's our high right here, all-time high on the Nasdaq 100. And we had a low there, slightly lower low, and now a lower low. And we had that high and a lower high, and that's technically the definition of a downtrend. Any security making lower lows and lower highs. So that's it. And also remember that on bigger picture, we just broke some key support. So again, to game a counter trend bounce is it's aggressive, and it may not happen. I just want to throw out levels that if it does, I'm thinking they're probably going to sell into any bounce before we even get back that far. I think it's now becoming clear to all, and honestly, I'm shocked that the institutions and individuals waited last minute. You know, the Fed's been reversing their stance from extremely dovish to slightly more hawkish. They're still, in the bigger picture, way more dovish than they should be at this point in the in the cycle. But with that being said, I just want to say that do not underestimate what a crowded rush for the exits look like. That means everyone that's trapped. We've had extreme bullish sentiment for quite some time right now. Everything I've covered, low put to call ratios, but we've also had market breadth deterioration, everything that says a big correction's coming. And if everybody's, starts seeing the same thing at once, and selling will beget more selling. That's how it works. Everybody's hunky-dory, everything's hunky-dory in your 401k and long-term investors. I'm talking about the mainstream public, not just the active traders. And buying and rising prices leads to higher and higher prices. But when we start going lower, you got a lot of people that have profits to take and protect, and you could see a waterfall drop. So I want to just say that, and that's why I'm trying to impress the fact that swing traders probably should not try to game any counter trend bounces. Maybe just sit tight. If the charts change, if anything changes, we bounce and we take back 15,536 with conviction. We have this divergent low. We're rallying and we're blasting through the resistance levels that quote unquote should check any rally. If that happens, then I'll let you know. And look, we're going to give back some profits. At least I will on my swing shorts. But hopefully, keep some profits intact. At this point in time, with this breakdown and everything going on, I don't think there's a reason you should let a rally get back towards those highs. Before, I told you that that's what I did. I gave it some room on my swing shorts there, and but this time around, especially on the heels of this breakout, if we rally much above there, and I'll give you some levels later on, but probably about the midpoint of that level there, maybe a 50% retracement. I'd have to put up fibs, but I could tell you roughly 50% be right, somewhere in the middle there. That would be a nice stop for swing traders, something above that level there. I don't think we're going to get there, but again, if we do, that's why I'm wrong. That's what it's telling me, is I'm wrong. And this breakdown, if bulls can somehow just take that and run, and then there's just not enough sellers in this market. There's still an overwhelming amount of buyers or potential buyers on the sidelines. So like I said, I'm giving my swing positions some room at this point in time. We've got earnings coming up. We've got a Fed for the first time in a long time, starting a hiking cycle. COVID, I don't even want to get into COVID. Let's just move on. There's the charts. There's the levels to watch. There's where I think we're going very short term, as well as where we're going longer term. And if a bounce fails to materialize here at this level with Apple at support, Microsoft and Alphabet, and Amazon close enough, then that's going to be extremely bearish. Again, because this is where the buyers, I use the word quote, I put things in quotes. Obviously, it's not what I think will happen. It's what should happen if you're bullish. This is where the buyers should be stepping in with both fists right now, buying a back test, another pullback, just as they did here, after the breakout here, and as they did here, and they should right now. That's how TA works, technical analysis. Get a breakout. If you miss the breakout, buy the back test or add to it on the back test. So what uglies up the charts or pretties them up for us, if you're short, longer term, is a solid break and close. Of course, is daily chart of 26.74. Then you have the 200-day moving averages just below. The buyers, quote unquote, should step in there. And if they do, other than a day or two, I would expect at least some reaction there. But if they don't, or even if they do and there's a little bounce and we break them, again, a solid break and close below the 200-day. These are all check marks. But after a while, I'm going to stop giving you check marks, because we're already in QQQ, for example, and that's my preferred shorting proxy, off the highs. The Qs have already dropped almost, about almost 9.4% to today's lows. So, I'm not going to be telling you it's objective to short once we're down 15, 16% and getting close to, this daily swing target. And then I also have weekly targets. And, again, the more you get down here, the more oversold you are. And it just only makes sense during a correction. Every percentage point you drop, you're that much closer to the bottom, whether the bottom is a lot farther or not. So, anywho, I'd like to get in, and I think we have some really good entries on our shorts. And I'm also, again, the point of this video is I'm seeing some check marks here. This is a weekly time frame I just jumped over to, so I can't give a solid check mark yet. But as of right now, we're down. QQQ has gapped down and is trading below this uptrend line. Remember, this is something else I was waiting to see to get a check mark, as well as that 378.86 level. So if we can close the week down below both of those levels, then that is going to be a solid check mark on the weekly chart, and that opens up the door for these bigger, deeper targets down here on the weekly time frame. So, all right, I got to wrap it up, because if I don't get the video out to you guys, and then everything's too late, but those are the levels to watch. And like I said, we've broken down, and I don't think any bounce is going to go very far, even if we get one. This has been Randy Finney with Right Side of the Chart. Have a great day.